Hello, everyone. This is Craig Sherman. I'm going to be presenting the invoice matching overview for FSM along with John Simpson. Okay. I think Dave's going to start off with the introduction. Dave Thomas.
Thanks, Craig. Hi, everyone. This is Dave Thomas, Vice President of Sales here at Bales and Associates. And before we get started, and if you're not familiar with us, I wanted to just take a minute and introduce who we are. Bales and Associates has been in the Infor ecosystem for over 26 years. We are entirely Infor focused, and we do nothing but Infor implementations, upgrades, and managed services. We support all aspects of the technology, including S3, Landmark, and Cloud Suite, and the HCM, Finance, and Supply Chain Management suites. In fact, we've been recognized and given partnering awards in 8 out of the last 10 years, and our consultants bring 15 plus years of experience in the Infor space with the equivalent of professional experience. Some were former benefits managers, compensation managers, directors of supply chain, as well as former controllers and CFOs. This year, we were in the year of 2020, we're real excited about an award we got from an organization called CLASS. CLASS is an organization that ranks healthcare IT consulting firms, and in the Infor ecosystem, we were ranked at the top of CLASS, which means our implementation methodology and our customers over the last year or two rated us extremely high for the satisfaction they have with our delivery, as well as the performance of our consultants working with their teams. Some exciting news we had in the Infor community, and earlier this year, Bales became part of Nordic. Nordic's an industry-leading healthcare consulting firm. Bales will continue to operate as a wholly owned subsidiary of Nordic, continue to be led by Jamie Bales as president. Nordic will provide us with resources to fund our growth, expand our business, and support our customers more effectively. And for healthcare customers in particular, it allows us to bring together Nordic's capabilities in the EHR space to provide a more holistic solution, including specific expertise in EHR and ERP integration. This combination will offer a best practices model to reduce implementation risks and leverage the data from both systems to drive insights and outcomes. Again, I'd like to thank you for joining us today, and let me turn it back over to Craig.
Great, Dave. Thanks a lot. All right, once again, I'm Craig Sherman. I'm going to be leading the invoice matching presentation today, along with John Simpson in the background. Just a disclaimer here, this is an overview of invoice matching for implementing the cloud suites or FSM applications, depends on what you want to call it. So Bales make, no representations of how the product or warranties and so forth. Just a disclaimer right here. I wanted everybody to know this. Okay. Just a little background on myself. I'm Craig Sherman, the finance practice leader for the Infor practice side on the financials. I've over 20 years of accounting and consulting experience. I started when I was 18, so okay, in case y'all wondering. I've been doing Infor implementations since 2000 on the finance side, from version 7 to 10, and now to Cloud Suites FSM version 11. I work primarily in healthcare, public sector, and also some retail clients. Okay, I'm also a former public school teacher and basketball and tennis coach in both California and Texas and Nevada. Okay. Here's some background on John. He has over 20 years of both finance and consulting experience. Also, senior financial consultant. We work together a lot, hand in hand. So he's going to be assisting me in the background. And any questions we may have, he's handled in the chat, and also he may chime in from time to time. Yeah. He has a lot of experience in both retail, healthcare, telecom. He's both a client and a consultant and an accountant. The agenda for today is going to talk about invoice matching. What is invoice matching? The highlights of it, the prerequisites, what you have to have set up first, the required setup, invoice messaging. Messages go to the buyers and let them know they have issues out there that need to be resolved, the processing highlights, additional processing, and reports and inquiries. If I'm going too fast and you can't hear me or will repeat something, just please let me know. John's one is in the chat section. So if you have any questions, we'll probably cover them at the end of the presentation so we can get through it. I know it's Friday. I'm on the West Coast, so it's only 10:15 here. It's either 1 or 12 o'clock, depending on where you're at in other parts of America. So you probably already got your weekends planned, the engine started, so okay. What is invoice matching? Invoice matching is a role-based application that's set up in FSM. I may go FSM, which means financial management, supply chain, or cloud suites, the old, what they called it last year. It allows you to accurately match large volumes of invoices to receipts and POs and pay them on a timely basis and manage your vendors. It's a very dynamic, multifaceted application, but once it's basically, once you have it set up and you have it, all your buyers and everybody in tune with your AP staff, it works seamlessly. I don't know the relationship with your AP and PO and receiving staff, but this is a partnership. AP can only pay what the PO comes in and receipts are coming in, so it's a three-way match. So it has to be, everything has to be in sync. Okay? It's definitely a partnership between all three departments: receiving, purchase orders, and AP staff. Okay. Types of matching now. You have a two-way match, a three-way match, and a four-way match. A two-way match is between a service agreement and a drop shipment because you don't get any receipts on those. A three-way match is between the purchase order, the receipt, and the invoice. A four-way match is usually between the purchase order, receipt, and inspection and invoice, like your high dollar items or some specialty items, you want to inspect them before you actually receive them in. So you open the box up, you inspect them, make sure that they actually what you ordered, the color, size, quantity, it's the right thing. You may be doing some specialty type operation or something. So you want to make sure you inspect those before you actually blank them in to match those up. Most clients, I would say most, I mean like 90% are usually using three-way match or two-way match, service agreements, contracts, and purchase orders. But the invoice matching can handle either one of these options here. Here's a matching overview. As you know, everything has to have set up. You got to set up everything, your prerequisites, which include your general global ledger, your currency, your AP, your vendors, your cash ledger. Set up an invoice matching side. Then you're going to enter the invoices in. You're going to match them. And messaging, invoice messaging, those are the ones for PO cost messaging if the invoice doesn't match to the cost of the receipt of the PO. And reconciling invoices, the ones that are outside your exception invoice, you want to reconcile those manually. In your additional match processes, you can run matching reports, you can run process to automatically have it match at night through a job stream. You can put things on hold. You can to chargebacks, those are different processes. You can also do analysis, reporting. But the thing that drives invoice matching is the setup. The setup and the partnership between your PO and receiving and AP staff. The setup is fine, your tolerances are fine, you'll be going seamlessly through the process. There's a lot of setup in invoice matching. It seems it's going to always have the word match in front of it, but it's really once you get involved in it, it becomes self-evident. You're going to have a match table type, a match rule group, match rules, match company, and match company components. I'm going to talk about these in the next slide. As you can see, the word match is everywhere because we don't invoice matching. Okay? It's just broken down in different segments. A match table, that's the one that's going to contain all your match rule groups. You put all your match rule groups out there to determine how you want to match invoices. In other words, the hierarchy, how you want to match them. You want to match in one invoice to one receipt, all invoices to all receipts. So you determine how you want to match them. You structure what you want to do. You have your match rules. You bring them all and put them back to your match rule group. And then it goes to the match table. The match company is going to hold all the things you set up in your match table, your match rules. The match rule group is going to go to your match company. Anyone who's familiar with AP company, just think of a match company as your AP company, but it's just for matching. It has more things going to have matching information now. So after you set up everything else, it's going to all go to the match company. It's going to put it all in one spot. You also have, once again, I'm sorry. Also, once again, you have.
What's going on next weekend?
Someone's on speaker. I can hear you. You might want to mute.
It's the 31st.
Tomorrow we go to the Coronas at 6 p.m.
Someone's on,
Maybe, but I'm gonna ask if we can go
someone
stop by a little
might wanna-
earlier.
one might want to mute themselves. We can hear your conversation. Okay. You want to hear me? Okay. You have match pools. Just think of a match pool like a big ocean, Atlantic Ocean, Pacific Ocean, whatever part of, the Gulf of Mexico. Every time you enter in, once you have matching set, every time you enter in a PO or receipt or invoice, it goes out here in this big pool, this big waiting area. And when you match it, you take them out one at a time or multiple at a time to go based upon your setup. So you can have it set up by company, vendor, purchase order. So when a company, you have multiple company, you have company 100, vendor 100, and purchase order 100. It's going to grab those together and it's going to match them based upon your matching rules and match levels and match tables. The recommended one is the company vendor purchase order. That's the more seamless one. It matches up more high volume and it's not as restrictive as having for ship to or just company vendor. It keeps it wide open. Okay. I tried to go through here and recommend the best practices that I've seen over the past 20 years so you can, to facilitate your matching process for you. You have match levels. You have two different types of match level, invoice match level and detailed match level. I haven't seen anyone use invoice match level, maybe like less than 2 to 3% over the last 20 years, because it matches everything at the header level. All it's concerned about is that you have the right total, the restaurant right total for the PO and the receipt. It doesn't check any of the details, the color, size, quantity, and stuff like that, and unit of measure. Detail match is the best recommended practice. It matches all the details on the receipt and the PO to the details that are on the AP invoice. So you actually get a more concise and more accurate matching. Okay. So detail match is the one recommended. For the rest of this overview, we're going to talk about detail matching. But I want you to know that it is invoice matching. Once again, here's the match rule groups again, so I can show you how they're set up. As you can see, your match rule groups is going to structure is used to organize your matching rules. So I have 3 match rules here. Detail match, they're all detail. My match rule group is called DM. Description, detail match rule group. And I have a type. When it says all to one, that means all invoices to one receipt, 1-to-1, one invoice to one receipt. 1 to all means one invoice to all receipts. And I'm doing it by unit cost. You can do unit cost or extended cost. And you see I have a tolerance button over there. We're going to talk about those later on, but what tolerances really are, those are the amounts or percentage you're willing to accept within the matching process. For instance, if you have an invoice for $99 and the PO came in for $100 and the receipt came in for $100, if you have a tolerance level set up for $5 or 10%, that will go ahead and match and save you time from having to stop each time and touch every invoice. Okay. Tolerance what you're willing to accept. I think of it like my dating. I'm willing to accept so many things, to tolerate so many things on my dating side from my girlfriend, what she's willing to tolerate from me. She has a higher tolerance level than I do, obviously. Okay. Match table. Once again, the structure contains all your rule groups. You can assign up to 3 rule groups per table. You must have at least 1 match table, and it's once again, I say it's all put back to the match company. You can create as many as you want. You can have a specific match table for certain problem vendors, ones you want to look at individually. You can have it set up by vendor class. I'm just going to vendor class is how you define vendors. About is it a PO vendor? Is it a retail vendor? Is it an employee? Is it a manufacturer? That's a vendor class. Help you define what kind of vendors they are. So you can have a certain match table assigned to a certain type of vendor. If you have problem vendors, you want to have different matching for that person or for that vendor. It's optional. Invoice matching is probably the most dynamic application they have in finance. It touches everything as compared to just GL and cash ledger and asset management, because you have other applications that's affecting it from the PO on the receiving side and the general ledger. Once again, here's the match tolerance I just talked about. These are required setup. Acceptable amount of discrepancy you're willing between the invoice, the receipt, and the PO amounts. What you're willing to accept instead of having to stop every time for every penny, every dollar. You know, if it's within this amount, we're gonna go ahead and accept it. Okay. You have an option there. You have an and option, and you also have an or option. The and option means it has to fall outside of both the amount and percentage. You have the tolerance set up by both amounts and percentage. It has to match both of those. Either if it falls outside of either one of either the percentage or the amount, then the match does not occur. Okay. That's the difference between you have your and your or. Most clients usually use the or option, but it's up to you. Just think and means both, or means either. Once again, here's your match company. After you put all those set up in, all your match tables, your match rules, your pool options, you got to put your GL account, general global ledger account information, process level. It all goes back to the match company. Match company is going to hold all that set up, all your match rules, your match tables, your company pool, your towers are going to all be held in the match company. It's going to be your one-stop shop. Everything you set all those up, you're going to just put them in your match company setup. And there you go. You also can have match codes. Additional setup, which that allows you to process and track match information such as reason codes, AOC codes, and PO code. Reason codes are reasons why you have to, every time you make something outside of tolerance and you want to say why you accepted that, you have to give it a reason that what was the message for tracking analysis purposes. So you can have reports on why did y'all accept this, why did he or she accept this particular transaction outside of the tolerance level. You put a reason there. It could be like, I'm gonna give you PIP, pay invoice price, POP, pay PO price. It could be quantity didn't come in, wrong color, wrong size. So you have a code there. It's like a 3-letter code. Just put on a transaction, let you go ahead and keep on processing. ALC, add-on charges, allowance deduction examples, include freight insurance, charges, duties, handling charges. Purchase order codes, I don't know if you're familiar with those. Those are additional codes you put to further identify a purchase order number. It's like an adjective at the end of it. You can put a code there, either alphanumeric or numeric code. If you want to have them identify certain POs, like service POs or service agreements or anything you want to further identify, those are optional. That's what the codes are for. The ones you have to have, though, in matching are reason codes. And if you're doing AOC and ALC codes, and purchase order codes are optional, but you must have reason codes. Okay. Invoice messaging. This is the one that really, in my opinion, makes invoice matching unique. Is that it's a message that sends back to the buyer in procurement to let them know that a discrepancy exists outside of the tolerance for this PO and receipt. And this message cannot be resolved. I'm sorry, not message. This invoice cannot be paid until the person who created the PO takes action with the message. They got to say whether they want to accept it, whether they want to pay it, whether they want to adjust it, do they want to send it back to the buyer? Back to the vendor. They need to change the PO. They must take action on this for it to close, for it to get paid. Any invoices that have outstanding messages on them cannot be paid, cannot be processed by AP, no matter how much AP wants to do it. Okay. This is where the partnership comes in between the AP department, receiving, and the PO department. It's best practice to actually use this feature. Why have matching on if you're not going to have messaging? To go back to the person, hey, this is outside our tolerance. They overbilled us. The invoice say we got 1,000. They only, say we have 10. We only got 5. Okay. Here's an overview of how matching invoice matching works. You're going to enter the invoice in. You're going to try to match it. If it doesn't match, if the tolerance exceeded, it's going to create a message, go to the buyer. You're going to have a PO cost message. That means the invoice exceeded the amount of the PO and receipt. You can have a service message, meaning it was on a service invoice or a service contract. And lastly, you can have a reconciliation message, which means those are the ones that you have multiple messages on, both a cost and a service, and you can reconcile those manually. Those are the ones going to take manual intervention. Notice how it's going to go. If the service is going to go from the buyer, reviews the message queue, the buyer authority reviews invoice message, takes action, the AP processor approves the audit of the message queue, AP processor reviews the message directly, detailed by invoice. So it's all a partnership. It's going to, the AP person can tell if the message is still sitting out there. They can tell when you've touched it, when you haven't touched it, if you resolved it or not. It lets them know that you also get reports or inquiries. So it all works in conjunction with everybody. So if the tolerance are exceeded, an invoice message will be created and goes to the buyer who created the PO for whatever reason. And it's going to sit out there until that message is resolved. It cannot be paid. Can't be forced paid. Has to take action on it. You have your PO cost message, what I talked about earlier. Those are the ones that exceed costs. So these occur when the invoice is added or created. So as soon as the AP staff person tries to add the invoice in and it exceeds tolerance, it's going to create a message that goes to the buyer's queue. The buyer must take action on that. Must either accept the purchase order or correct it or reissue the PO or talk to the vendor that they bought it from. Anything that it must be worked. There's a new feature in FSM, a role for match specialists that allows them to take action on also. So match specialist role along with the AP processor in matching. So I said before, in FSM, everything's role based. So based upon your role or your responsibility, the company is going to determine what you can actually do in the system. You'd be surprised, a lot of managers cannot do actual processing. A lot of AP processors can't do matching. So the match specialist is a special role created for matching issues. So you could they can accept it, they can adjust it, or they can forward it to another buyer. This is one that everybody loves. So if I got 10 messages out there in my queue, and I'm John Simpson buyer, and I'm Craig Sherman buyer, and I know that hey, I'm gonna forward my problems to John. So all it does is just forwards the message to John from me, but the message is still out there. It didn't resolve the issue. You just forward it to another buyer. This should normally only happen if you're on vacation or you're out of office that day. You have all your messages going to another buyer. Yeah. So that does happen. People forward them out of their queue to someone else, but the message still exists. It didn't resolve it. Unless you accept or adjust it, it is not resolved. So the invoice cannot be paid. Forwarding does nothing but moves it to somebody else to take responsibility for it. Reconciliation matches occurs when an invoice is released and matched. In other words, like the other one, just when you add it in, this one lets you go ahead and release it and match it, and the match is attempted. So you release the invoice first, and you attempt to match it, then it's going to create a message. And that's going to go to smart reconciliation also, which we'll talk about later down the line. And this is one where you can approve it. You can accept the subscription, approve it for invoice payment. And the difference is going to go to your R&I. I'm going to hate to say receive, not invoice account. I mean, goods you have received, but you have not been invoiced yet. You can disapprove it, which starts the process all over again. So it makes the invoice open in an pending status. So someone take action to find out why it needs to be paid. That one's not normally recommended unless you want to do a lot of research on it. Or you can do a chargeback. I'm going to talk about that further down the line, but I'll just talk about it now. What a chargeback allows you to automatically, what they call, pay the invoice for what you agreed to pay for when you made the order. In other words, the invoice came in for 150 and the PO was coming in for 140. If you do a chargeback, you're only going to pay for the 140, and it's going to print out a statement and a reason to be attached to the payment when you pay that to the vendor. So they would know why you charged them back for that. And once again, you can forward it. You can also forward it to another buyer. It closes from one buyer, but it sends it to another buyer, and it's still open. It still haven't been resolved. So forward does the same thing in both reconciliation and PO costs. It doesn't solve the issue; it just moves it to someone else to resolve. You have servicing messages, file your service invoices, service contracts. This one does the same. It occurs when you release the invoice and when the match is attempted. You can have services for both PO costs, for over extended amounts. Say for instance, you're supposed to wash John's Mercedes Benz every Friday, once a month, and only wash it twice a month. That's gonna create a service message. Any type of service, if they didn't do the quantity, they didn't do it a number of times, or they overcharged for any service you're supposed to have. They're supposed to come and install a new MRI machine. They overcharged, or they're supposed to install two and they only installed one. Anything that's the service installation of services that you have, that's what these are for. And this type of service POs or service contracts, you cut back against them each month. So any type of invoice that you have that's a match invoice, either two-way, three-way, or four-way, you have messaging turned on. And if it doesn't meet your tolerances, it's going to create a message to the buyer who created the PO. And it cannot be paid until that message has been resolved. Once again, I was going to talk about chargeback. Here's an example with chargeback versus a credit memo. A chargeback allows you to go ahead and pay the invoice and reduce the amount right now, automatically created, automatic, real time. It provides a reason for the reduction, links it back to the PO. You get it attached to the check when you print the check out. Whereas a credit memo, you're waiting for the vendor to send you a credit memo. So you can pay, so the invoice is going to still be sitting out there as unpaid until you get a credit memo from them to adjust the invoice manually. That's why most clients have to do a chargeback. They can just keep processing and keep on going. But also some vendors don't accept chargebacks. They may make you wait for a credit memo. It's one of those things you got to kind of know your vendor, know your personnel, people that you're dealing with. Most clients try to use chargeback. You got to be real. Got to also understand that most vendors do not read that second part of the check, the attachment. They just read the check amount, or they tear off the back piece thinking it's just a letter. So chargebacks are great as long as your vendors are aware that you're using chargebacks. Otherwise, you might want to wait for credit memos. I prefer using chargeback. I always try to tell my clients to use chargebacks. You can just automatically create it and keep on doing your processing. Here's the overall step-by-step processing highlights. Purchase order invoices, you're gonna enter them in. It's gonna create the detail from the PO side and the receipt side. If you have any add-on charge, you can add charges on there. It's gonna require you to match the goods and services if you have ALC. And it's gonna create a cost message. It doesn't always create a cost message or a recon message. If it matches perfectly, it just goes through seamlessly. You just put the invoice in. You got invoice for $100, the PO for $100. You got the invoice for 10. The receipt came in for 10. It came in boxes. Everything was matched. You press enter, it's gone. Hopefully, and most of your organization will have at least 80 to 90% of matching things within tolerance or perfect matches. You want to stop each time and have a lot of messages out there. There are two ways to enter your matching invoices in. You can online entry, data entry keyboard, or you can have an interface through your electronic data exchange, EDI. Evaluated the receipt settlement, it means you're going to pay based upon a receipt, or you can have them through third party, upload them to a third party non-Infor invoices out of a non-Infor system, like a Epic system or Excel spreadsheet or something like that. Most clients, 90% use manual entry or EDI. For this session, we're going to talk about online manual entry. Once you enter an invoice, and because you have you're going to have these two options. Once again, you're going to have detail match or invoice match. For this, we're only going to talk about detail matches. As my rule group I showed earlier. So you get all the details on the invoice, match the details on the receipt and the purchase order. When you go into the match, when you go into the to put the invoices in, you're going to have an invoice entry screen. You're going to choose what type of invoice you're choosing. And you see here, you have the basic, which is just AP expense invoices, tax invoices, service contract, freight. With this one, I just chose match invoice. You can see it's going to create, notice it has create details from receipt. You have the company number that you put in, the vendor number, the invoice number, invoice date, due date. The terms will default from the vendor, or you can override them, and the invoice amount will go there. Currency will default in, process level will default in, address will default in. You would just press save here, and you go to the next screen. It creates details for you, and if it's within the proper tolerance amount or it's a perfect match, you could be able to match at the same time. The main thing you have to choose on this screen, make sure you choose the type of invoice you're doing. It's going to default to basic. Just make sure you drop down and choose match invoice or service contract. Okay? If you're doing service invoices. Otherwise, it will not match it. It won't even try. It'll get lost in limbo. So the type of invoice you choose determines what process you're going to be doing. Here is a step-by-step how it looks to do a perfect match entire PO receipts AP match process. Once again, like I said, you have to have a partnership with your PO and receiving. They're going to create a PO. They're going to release and issue the PO to the vendor. Hopefully the goods are going to come in within that same week or the next day. So receiving is going to go ahead and receive them in. They're going to release those. So as you can see, it all starts with a PO. Then it goes to receiving. And then the invoice may come in that's next. Let's say they did it on Monday. They got the goods in on Wednesday. And the AP invoice may come in on Thursday or Friday. Now the AP staff is going to go in here and try to enter this invoice in and match it. Okay. And they're going to go ahead and match it and add the invoice in. It's going to create the detail, and they're going to select match so they can match it real time down the process. But once again, everything starts with a PO and a receipt. So even if AP gets the invoice in before the receipt comes in, it's just going to, they can't match it. It's going to say no receipts available. It's going to sit out there. AP can only match and pay what the PO and receipt allows them to do and what the buyer gives them authority to do. So it's a partnership again between the PO, receiving, and the AP staff. Here, I just want to let everybody see all the different ways, all the possible match options. Requisition, PO, receipts, match entered. Just show you need to correct the amount, reconcile it, charge back, disapprove it, don't pay it, unmatch it, cancel it. I mean, as I say, it's a dynamic application. It takes a partnership between the AP, PO, and receiver. I keep saying that over and over again. I know y'all probably, but it does. So all this can happen on just one invoice for just $100 and just a quantity of 10. If something's wrong with it, or if it's something you need to prove it or pay it, message, all this can happen on one invoice. But hopefully, based upon your tolerance that you set up and knowing your vendors and knowing people you're dealing with, you won't have even half of this on less than 5% of your invoices. But this could all happen on one invoice. It's the whole possible options here. So depending what's wrong with it, where it's at, it goes here, it goes there, okay? But it will all eventually get paid or cancel or you start over. One of the great features I like about invoice matching is that you can do auto matching. In other words, you can have a job set up at night, and all you got to do is enter the invoices in or interface the invoice in, enter the PO receipts in, and the system will go out there and match it for you automatically. So when you come in the morning, you'll have gives you a report to say invoices match, invoices didn't match, and it tells you the reasons why they didn't match. So this is the one that most clients use. This you don't have to enter and match on the same screen. You can just leave them out there and have it run overnight or whatever you want to run. You can run it on demand if you want to. You don't have to run it at night. You can run it whenever you want to, and it automatically matches invoices for you. And it shows you results. You have a job on your printout. You can tell what's wrong with them, the ones that did match. Okay. Outside of tolerance, it has breakdown by percentages. This is a great feature. This is what I strongly recommend. Everybody uses it all the time. You can run on demand or have it set up at night. Okay. Just put them in there, interface them in there, and have it go ahead and match them for you. And gives you reports and analysis of ones that didn't match and why. This feature, smart reconciliation for all the, I don't know if anybody on here from S3, when I say the old Lawson S3, the form number driven one with the, with the form numbers and flow charts. This was something you have to buy separately in S3, but in the Cloud Suites FSM world, it comes with the system automatically. It's part of the standard package. It's a suite. Now everything, now when you get Infor, you get every application in finance and supply chain, even if you're not going to use them. So smart reconciliation is part of the new self-service thing in matching also. So it allows you to match things, much seamlessly. Any exception type invoices that did not, do the initial matching process, you can match them here from a work list. So it's a great feature now, a standard package with the Infor FSM applications. It's a time-saving feature. It's required now. It's not optional like before because it comes with the system. So if you're doing invoice matching, you also have to set up smart reconciliation. And you'll be glad you did. It will help you save time. It eases the pain on everyone involved. So because this is what I thought the exception processing here. Any exception invoice that the match was unable to match for detailed match for any other possible reasons. An item is listed on the receipt but not listed on the invoice. Item listed on the invoice but not listed on the receipt. Item listed on the PO but not on the receipt. Anything that's not matched what it should be by the details is going to go to exception invoice, and you'll be able to match those through smart reconciliation. Okay, overbilled you, underbilled you. Probably a good thing to underbill you. Okay. Also, in invoice matching, you can do, say if you match something by accident, which is what I do all the time, unless John's around me to help me stay straight. You can go and match and reverse them out. You can unmatch a match between invoices that have been previously matched. It cancels any chargebacks or credit memo. It puts it back out there like it never happened. It's like an undo. Right? Before they're posted to the global ledger. So you got to know where is it. Has it been posted to the global ledger? You do a match reversal. If it's been posted to the global ledger, you do what they call a PO invoice cancel. This is going to reverse out the entries from the global ledger. It's going to reverse and unmatch the invoice and put it back out there so you can do it later. So you have either option. So it's never, you can't say, oh, I already matched it, now it's too late. No, it depends on where it is. If it's been posted to GL, you do a PO invoice. If it hasn't been posted, do match reversal. So you can correct mistakes made by people like me. Okay. If you get receipt lines pending inspection, it's going to appear as no receipt. So like I said, even though the PO has been out there and the invoices came in, if they haven't received it in, it can't match it. It's going to give them no receipts. Or if it needs an inspection, it's still pending inspection. It will give no receipts. So either way, and when you have invoices with no receipts, you can try to go out there and create detail from the PO lines if you want to match it, if the receipts are there. Maybe they haven't received them yet. The match specialists can do that. So there is ways to, like I said, correct any mistakes and then you match that you didn't want to match. It will tell you what's wrong with the invoice and the PO. It actually tells you in English. It tells you what's wrong with it. You have online analysis, which is great. I just gave it what I thought were the top 5 or 10 ones you can get. Detail analysis, invoice analysis, purchase order analysis, unmatched receipt lines, invoice not received, invoice message listing. You can see this message listing will show you all the messages that are still sitting out there that have not been resolved, or if they're pending, are the ones that have been resolved. Invoice add-on chart list. You can do these on demand anytime you want. The one that people normally use almost all the time is the detail analysis, invoice analysis, and invoice message listing. But these are just the top ones, the top 7 or 8 I want to pick up for this presentation. There are more, but these are the ones that I use a lot in order. And with this, I broke them down for you here in English, so you can see what they are: detail analysis, invoice analysis. Okay. You can get a list of all your unmatched invoices for a specific company. Match analysis report, it breaks down the status of invoices not received, message listing. You can see the ones that are still out there. So you really can't hide too much here. You can actually get real-time reporting and analysis on these. These are great to have. Okay, I came to the end of my presentation. These are things that you have Infor online docs now. You can get online documentation, user guides. You have the concierge for Infor. You can dial in and do questions and answer that. You have Campus for self-study, self-training. I live in docs a lot, and I go to Campus sometimes to review different things. Okay. Hi, John. Are there like 100 questions in the chat?
Oh, for the chat, no questions as of yet. So if anybody has any and they want to put them in the chat, we can certainly get them answered, and we could discuss, anything related to matching you need.
The first question gets $1 from John.
Do you take a check?
Okay.
So I don't think we really have any questions, Craig. It looks so.
Okay.
I think we're okay.
Okay. We're going to have another series of these coming up in July. Occupational health and punch out. You can contact Molly, the information right here to register. Okay. If you have any questions from me or Mark, feel free to, go through Molly to contact us later if you're afraid to ask them right now. Or you're shy like John and I. We're going to have more informative Fridays coming up. I'm going to let Dave speak to this.
I can take that for you.
Okay.
Yes, everybody, we have this lovely program. It's called Coffee with Consultants. You can either email Molly or go to our website and type in the question you have, and you get a free 30-minute session, a one-on-one with any one of our phenomenal consultants that we have at Bales and Associates. It could be finance, it could be supply management, it could be punch out, it could be anything HCM folks. So just please reach out to us, and we'd be more than happy to have a one-on-one conversation about any of those challenges you might be having. And I believe that's it.
That's it.
So that's it. Great job, Craig and John. Amazing as always. We just want to thank you all for taking your time on this Friday afternoon to spend with us on Informational Fridays, and we hope you have a great weekend. Thank you so much. Goodbye.
Thank you. Bye, everyone. Thank you.